Please note that World HD posts on social media may include statements concerning financial market trends and are based on current market conditions, which will fluctuate and may be superseded by subsequent market event. The investment strategies and broad themes discussed in World HD live streams, recordings, and social media posts may be unsuitable for certain investors depending on their specific investment objectives and financial situation. Information and data contained in posts and on live streams have been obtained from sources believed and checked to be reliable, but not guaranteed. You should note that the materials on the social media platforms are provided as is without any express or implied warranties. Past performance is not a guarantee of future results. All investments involve a degree of risk, including the risk of loss. Any comments made in the materials are opinions with no guarantee that any expressed course of events will actually transpire, and no compensation has been paid to any person providing a testimonial or comments.
Can you see by the dawn's early light what so proudly we hailed at the twilight's last gleaming, whose broad strides and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets regular amongst birds singing out, yeah, through the night, that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free
Good Wednesday morning, streaming live on Rumble, X, and YouTube on this Wednesday, December 3rd, 2025. Today's Energy Wednesday. We'll spend some time doing some energy stuff. Energy's been incredibly quiet, even though there's a lot going on in the energy. There's probably a lot going on in the energy space that we don't know about, okay? The things that we know about are crude oil, natural gas, heating oil, we talked a little bit about RBOB gas, ethanol, that kind of stuff. Electricity, nuclear power generation. There's probably a lot. I mean, again, we get the small modular reactors. That's been in the news. We've talked about that a decent amount, and never enough. But it's actually been pretty quiet. And so we'll take a look at crude oil again today, but it's not exciting. It's just like watching paint dry, but the trade continues to work, right? This bear put spread where you just keep riding this crude oil down the line, and it's holding this converging triangle. This will give us an example of how these typically work, or at least 70, I'd say, 70, 80% of the time how these converging triangles work. Still fighting this one in the gold. Right now, you just have to say with gold, that thing's not going to work. That can change in any given minute where it just slices through. But, we've gotten to the apex. It's hanging out above it. I thought yesterday we could see the last end of the gold coming off. And why do I bring these two things up? Well, we've got commodities. We've got copper on highs. We've got silver ripping to highs. The metals going higher. And there's a couple things going on here with the metals. And one, this fear of tariffs. Again, tariffs have kind of taken a backseat. We haven't heard a lot on the tariff front in a while. Supreme Court hearings underway. I think they're going to decide. I forget what the decision date is on whether or not President Trump's tariffs are going to be able to be upheld or not, or if they're going to be upheld or they're going to be able to be utilized as they were. Now, there's plenty of things that they can do on the back of this if for some reason the Supreme Court doesn't side their way. It's just it would send a message. But anyway, back to the tariffs. The fear of the tariffs is that people are piling into copper a lot for that reason, but also, if we're going to bring manufacturing back to the U.S. and if this is going to work out, okay, and that's really the intent here, then they're going to need a lot of copper, okay, no matter what. We still run wires, we still have to run a lot of copper wiring. The other thing is all the data center build out. So there's demand for data centers and so forth. And then obviously the overhang of that tariff. And the problem is what we saw with the tariff situation. If you remember, we were watching this copper market and it got pretty extended. It was earlier this year. I forget. We'll take a look at that today. Let me mark that down. We'll look at copper. I didn't have that on the list, but we'll look at copper today. With copper, the situation was in place and people were doing the same kind of a thing, trying to front run the copper market. And then, one headline comes out on copper and the thing sold off like 20% in a minute or 2 minutes. So it's a very dangerous play. Now, how can you protect against that? You can use options. Okay. So a lot of people are probably like, hey, I'm not getting caught by that one again. So they're probably using options in this particular case, some sort of a strategy here. Again, a lot of the players in this copper space are going to be the actual producers that are, either pulling it out of the ground, transporting it, refining it, turning it into wires, turning it into useful products, whatever those may be. And so they're the producers and they have the underlying asset. So they're not quite as susceptible as someone who, an institution's buying copper because it's part of their portfolio. So people who are doing that, they have to think about this differently, right? They have to act as if they own the underlying asset. So they probably need to put some sort of a structure, like a put structure in there, or some sort of a call purchase, a selling. They could sell a call and they could probably buy a put. There's a lot of ways of going at this, but the key is they have to simulate or emulate. They have to de-risk is the sense, right? They have to act like they have the underlying asset if they're going to, someone who doesn't own it, who's a speculator, right? One investor, speculator, all falls in the same category. If they don't own the underlying asset and they want it as part of their portfolio, they're going to have to think about how to hold copper differently after what happened to them earlier this year. 20% hit in 1 minute. We're seeing a lot of that going on. I haven't seen it in a long time in the currencies, but the other day when the Chicago Mercantile Exchange was shut down, and again, that's a fishy situation. They say it was because of a cooling issue. I'm not sure I believe that, because some of the stuff I saw, they spiked the markets a little bit, and they say, oh, something overheated, and they got to add redundant cooling capacity and so forth. That's a little fishy to me. It's almost like they're testing something out. The other thing that I was going to say that's a little fishy is these data outages, and then also some of these spikes in markets. Like we'll see, like Bitcoin. This, the Trump American Bitcoin thing took almost a 50% hit in 30 minutes yesterday or something like that. So again, they're targeting these assets, and the question is who and why and what's the agenda here. But I guess back to the point, we've got these tariffs, we've got these metals markets on highs. And what does all this matter, right? We've got, the crude oil, we've got natural gas, we have all these metals markets are pretty strong, gold included, although gold hasn't been participating as much as some of the others have lately. And we've talked about that, right? That gold-silver ratio coming in, more of a need for industrial use and not as much for a precious metal use, at least at this moment in time. Could the gold have sold off? Maybe. Could it still? Maybe. But it just doesn't look good, right? So again, now we have to just sit back and wait. And, I've had good trades on the long side in this since the fall from 4,400. Again, what contract are we looking at? Because now the contract's rolled and 4,400 is now 42 something. So again, it gets confusing. But anyway, we'll call it the old one that we were watching when we hit the double tops up there, the 4,400, the sell off back down to 3,900. So 500 point sell off, $500 sell off per ounce. And then now the stabilization, it seems, in the gold market. I'd like to see it. There's a lot of reasons I'd like to see this thing get flushed down to 3,500. One, just to take off some of the speculative boil. Two, technically, we've got some things in there that indicate we've got some things in these currencies. We have to talk about the dollar today, too. That thing's absolutely hanging by a thread. I just got stopped out on some currency positions. Anyway, and that gets us to the real point, the dollar, right? The dollar going up would change a lot of this stuff. It would, and we're going to run some clips on that. We might as well just do it. We've got a couple clips here. President Trump talking about a couple things. They had their big cabinet meeting yesterday, and where they line everybody up in the whole cabinet, and they put them around the table, and they were going around, right? From Department of Health to Department of Agriculture, Department of Energy. Although I didn't catch the one in Department of Energy in today's Energy Day, I should have tried to catch that. But here he is talking about their policy and Trump tax cuts, reduce debt, and they won't. And saying that at some point, this is a hard one to believe. It is and it isn't, because it's all funny money anyway. So it's really not that hard to believe. But he's saying that we won't even have income taxes in the near future, whatever that means. Okay, so that opens up a floodgate of a lot of different things. I'm going to get a little pessimistic today on some things that should show up as good headlines, like Michael Dell and his wife donating $6.25 billion, right, to underprivileged kids, supposedly. I'm going to get a little pessimistic on that because I just don't buy it. It's very, very. From this technocratic viewpoint, when I look at this, I don't want to sound so pessimistic, but you see it through a different lens, and you watch. And I've watched Michael Dell's career, and I've watched him do things that aren't good, and now all of a sudden he's going to do great things and give kids $6.25 billion, and try to get them investing in America. I mean, the story sounds so good, right? It sounds so good. And I don't mean to sound so pessimistic, but I am a little bit. But anyway, back to the point. Here's President Trump talking about that. Tax cuts, reducing the debt, and we won't even have income tax at some point. Here we go.
Next year is projected to be the largest tax refund season ever. And we're going to be giving back refunds out of the tariffs because we've taken in literally trillions of dollars. And we're going to be giving a nice dividend to the people. In addition to reducing debt, as you know, I inherited a lot of debt, but it's peanuts compared to the kind of numbers we're talking about. So we're going to be making a dividend to the people. And additionally, we're going to be able to reduce debt. And as time goes by over the next 2, 3, 4 years, those numbers are going to go up. And I believe that at some point in the not too distant future, you won't even have income tax to pay, because the money we're taking in is so great, it's so enormous, that you're not going to have income tax to pay. Whether you get rid of it or just keep it around for fun or have it really low, much lower than it is now, but you won't be paying income tax.
Okay. Sounds great, right? Sounds great. All right. Here he is talking about inflation and how he stopped it dead in its tracks. Now, look, when he left office the first time, inflation was definitely in check, right? We'd been going up at that 1.8%. He'd actually turned it to the point where we got crude oil to negative $40 a barrel, and crude oil is a big factor in the inflation part of this. So the fact that crude oil has been very quiet, very tame, very mild, as we see gold going to new highs and silver going to new highs and copper going to new highs and AI and all this, this, that, everything, right? All these things going on, and yet crude oil has been very quiet, okay? And, and we've had MBS, Mohammed bin Salman, who relies heavily on this, was at the White House, 2 weeks ago, and he's very eager to invest in other things. So, again, it leads me to believe that there's something going on in this energy space that could be actually, at some point, mind-boggling, and that could bend the curve, right? That could bend the curve like we can't imagine. If we found essentially an infinite source of energy, and it would change the dynamics of the world, because again, remember, our dollar is based on really a petrodollar. Oh, something just came out, got hit on some more currency stops. This is just ugly. So we'll have to take a look at this dollar here in a minute. It's just painful. So painful. Okay. Here's the next clip with him talking about inflation while I clean up some messes here. Here he is talking about the inflation stopped dead in its tracks. And he goes back to crude oil, talks about inflation, right, is not quite under control yet. I would say that's, but he talks about deflation in this too. And we'll come back and comment on that, on the deflation end of this. So here we go. Is this the right one? Let me see if I think this is, hopefully this is the right one.
Since last January, we've stopped inflation in its tracks. And there is still more to do. There's always more to do, but we have it down to a very good level. It's going to go down a little bit further. You want to have a little tiny bit of inflation. Otherwise, that's not good either. Then you have a thing called deflation. And deflation can be worse than inflation. But we have it almost, we'll soon be at a perfect level, but we inherited the worst inflation. But we have 20 states that are now selling gasoline at less than the $2.75, think of that, $2.75, and it was at $5 under Sleepy Joe. Grocery prices are down, with the cost of Thanksgiving turkey this year down 33%. It was lower than 33% lower than under the Biden administration. Egg prices are way down 86%, thank you. And mortgage rates, despite the fact that we have an incompetent chairman of the Fed, a real dope, who should reduce rates. I saw even Jamie Dimon said he should be reducing rates. I never saw Jamie Dimon say that. I wonder why he said that. But he really said it because he's right. But we have a guy that's just a stubborn ox who probably doesn't like your president, your favorite president. But they're going to be coming down. We'll be announcing somebody probably early next year for the new chairman of the Fed. I talked to Scott about taking the job, but he doesn't want it. You got the greatest job here.
Yes, sir.
Right? He said, no, I want to stay chairman. I want to stay right where we are, Treasury. And I think we're doing really great, aren't we? Yeah?
We're doing great, sir. It's a great team to be part of.
Yeah, no, it's amazing.
Okay. So there they are talking about the inflation. I think that was the one where they got into deflation. But anyway, what he was saying yesterday about, or what he was saying recently about deflation, is that it can actually be worse than inflation. And I'm not convinced of that personally. Okay. how would we even know? Because we've never really seen it. They don't let us have deflation. Why do they not let us have deflation? Because they need inflation to keep inflating away the amount of debt that they keep printing. I don't know what we're at on the debt clock. Maybe we'll pull that up. But I bet we're at like 30. What has it been, a month since we hit 39? So we should be at like 39.3 trillion on the debt clock. And again, who knows, that debt clock's just an algorithm that just keeps pumping it in, how much debt. It's not really connected to anything. It's an estimator, a projected thing of, and then it hits the media. I mean, the whole thing really, there's really no connection to anything real. If you want to, I mean, what's real? Love, human beings, God, those things are real. The rest of the stuff is like, it just doesn't even feel real sometimes. Okay. All right. So here, and I don't mean to sound so pessimistic, but I am going to be a bit pessimistic on this one just because no one else is going to, right? No one else is going to be pessimistic about this. Maybe one or two other people that I know will be questioning this, but I want to question this with Michael Dell donating to $6.25 billion, right? Or $250 per kid. Okay. Him and his wife are on this Invest America thing. All right. And so again, I hope that this is for good. I hope that this is really to benefit the kids. But here we go. Here's President Trump introducing it, and then Michael Dell coming in and talking about it.
In honor of America's 250th anniversary, the Dells are announcing today that they are giving 25 million American children $250 each to save and to invest in their personal Trump account.
Why is this the right act of philanthropy for you?
Well, our foundation has been focused on children since the beginning. And when this Invest America Act was passed earlier this year, we saw it as a platform for companies and families and communities and philanthropists to contribute to these accounts. And as you probably know, the government is giving $1,000 to every newborn in an account that will essentially go in the S&P 500 and compound over time. And when the child's 18, it becomes like an IRA. It can be used for education, to start a business, to start a family, for continued savings, to buy a home. And so what Susan and I wanted to do was help out some of the kids that weren't included in the government program. And so the kids that are 10 and under that live in zip codes where the median income is $150,000 or less, that aren't in the government program, so think ages 2 to 10, we're going to give 25 million of those children $250 each in their account. And we hope that this inspires them and gives them hope and opportunity and prosperity. I've spoken with a number of other philanthropists. I believe you'll see some other significant gifts, and we know many companies are going to match the government's contribution, as Dell Technologies is certainly doing, and a number of companies have already announced. So we're super excited about what this can become over time as these accounts grow to be something significant.
All right, so I was getting a few things here so I can comment on this. Okay, so again, $6.25 billion. He and his wife have led this thing off, right? Let me just go through this stuff on Michael Dell. So I watched this whole thing go on back in 2014, right? As these guys operate in an interesting way. They'll take a public company, then they'll take it private, right? They'll go to the private equity markets. They'll find ways to extract value out of it. Then they'll take it. And then what they did is they took it back to the public markets, okay, and became public again. Now, Carl Icahn, who, again, love him or hate him, but he was a corporate tycoon, corporate raider, essentially, where he would go in and get on boards and try to make change, okay? I actually like Carl Icahn, okay, because I listened to a lot of interviews with him back in this period of time where he was trying to get in there and clean up Dell, right? For what? To make money, of course. That's fine. No problems with that, right? That's the capitalist mindset. The problem is what was going on at the time was Michael Dell and these guys were extracting a lot of value, and they were basically, there was a lot of stealing. It's a long story. there was a lot of, how do I put this quickly? Well, let me just go through some of the stuff, right? So Andreessen Horowitz got involved in this. Mark Andreessen, okay, definite technocracy type, private equity. Silver Lake was involved in this. Okay, these different private equity firms were involved in this, and they were trying to extract value and keep it from the shareholder. Okay, I guess that's the big thing, right? These markets are supposed to be public. The public equity market goes in, makes an investment. Okay, then they get beat down with a manipulated share price, and then they take it private. Okay, so the public investors never really got the benefit. They take it private, they extract the value, and then they clean it up, make it look good, put lipstick on the pig, and then they make it public again and push it back out there. Okay, this kind of stuff can go on. Carl Icahn was watching some of this stuff go on, and he was trying to take it. He was getting involved in this, right? There were a lot of different things going on at the time. It could have gone multiple different ways. Okay, but he was saying he's known for stacking the board, right? Kind of like what we see going on with the Fed, where, they're not doing what you want. So what do? You start trying to stack the board so you get the vote to go your way. Now, that can be good, that can be bad, right? You can stack the board and extract a lot of value and rip things off, or you can stack the board and try to actually let the public markets, right, benefit from all this, okay? So everybody can point fingers. Carl Icahn's a bad guy. Andreessen Horowitz was out trashing, Carl Icahn. Michael Dell was trashing Icahn, saying he's a terrible person. My takeaway, for what it's worth, is I watched this whole thing go on for a period of time, and there was a lot of this going on. Carl Icahn was battling with Bill Ackman, right? Bill Ackman and those guys were going head to head, and Bill Ackman is a questionable character as well. For those of you who know him, he's been in the news a lot lately, with a lot of the Jewish, a lot of the Israeli type sentiment and stuff like that. Again, funny how he surfaces. Funny. Got to wonder where Bill Ackman got a lot of his money, right, to run his fund, Pershing Square. Okay, again, a lot of this stuff is very fishy. We could open up cans of worms all over the place. I guess what I want to get out of this is I watched this whole thing go on for a year or two, okay, with Michael Dell, with Carl Icahn, Michael Dell with Silver Lake, with private equity, with Andreessen Horowitz, and I watched this whole thing go on, and my takeaway was Carl Icahn was clearly the good guy in that situation. Now, other people can have other opinions on this, and that is totally fine, right? My only thing is I've watched Michael Dell's past, and I just don't believe that this guy's doing this for good, okay? I want to look. I mean, I know it sounds terrible. You want to invest in kids, but a lot of these people are vultures, right? They use kids and they're vultures, all right? And is that what's going on? All I want to do is throw it out there so we can watch and see what comes next. Okay. He said there's going to be other investors who come in here and step in, and we're going to see more people showing up. So that's what I want to see. Who else shows up? This story isn't done. This story's only begun in my mind. Okay. Something to pay attention to. The problem is that we keep getting further and further down this technocracy path. And if my suspicions are correct, that this is just a gateway into different things, right? So large-scale government-backed financial infrastructure tied to children's future, okay, like mandatory opt-out accounts for every child, could in theory be extended into more comprehensive seeds of control, tracking who deposits. So they're going to open this account. It's got bipartisan support right now, okay? He's talking to, who was he talking to? I think it was Schumer on one, I forget who it was. No, it was Cory Booker. He talked to Cory Booker yesterday, and he talked to what's his name down in Texas? Ted Cruz, right? So he's got the back, of course, because Dell's out of Texas, right? So of course. So anyway, tracking what they can do though, when they open up this seed account of $250 for every kid who lives in a zip code under $150,000 of median family income, okay, every kid's going to get one of these accounts. The question is, they can start tracking who deposits, okay, who's making withdrawals from that account, linking it to benefits, tax history, and parental behavior. Okay, what parents actually contribute to this? Like it's an IR, what's it? A SEP, like a or a not a SEP. These savings accounts for kids' colleges, right? which again is kind of a crazy. I mean, I could open up that one too. The point is they can track that stuff. Okay, so when a program scales nationwide and involves data, it invites institutional oversight or control. Right, the backing by wealthy individuals and institutions, versus grassroots, okay, makes it structurally similar to other large-scale public-private systems that sometimes expand scope over time, okay? And then we get the language used by proponents. Every child gets a stake, ownership, okay? And we get financial inclusion, right? And we get broad coalition, okay? These kind of phrases that we hear out of this. Depending upon how this program gets implemented, create dependencies or expectations about behavior, compliance, or good citizenship, okay? And so here we go. What to watch for, right? The things we want to watch for. Full transparency about who controls the data. Again, this is the world we live in. Who controls the data? Which institutions manage the accounts? What data is collected? Who can see it? How it's being stored and shared? And whether there are limits on government access. Okay. Remember, Michael Dell sells a lot of servers to these data centers. Okay. So he's in this thing hook, line, and sinker. All right. Clear legal boundaries to prevent mission creep. Okay, ensure that the accounts remain purely financial tools. What banks are these going to be allowed to be opened at? Is this a way to migrate people from local banks to these big banking institutions, right? For instance, someone gets your email account, okay? They get your phone number, okay, because you got to give this information to set up these accounts. And then what happens? All of a sudden, they start promoting and selling and selling and selling, and they give you incentives. Bring your other accounts over here. We'll give you a great deal at Morgan Stanley, at Bank of America, at Citigroup, at JP Morgan, right? At Goldman Sachs, right? Golden Slacks. Bring your money here and we'll take great care of you, right? I've just seen this stuff go on. It's just very fishy to me, okay? Then they can promote these deals to you, right? And people will go for them because sometimes they'll incentivize. Sometimes they'll make them loss leaders. You're like, how can they offer that when everyone else is offering this percentage? How are they offering so much more? Well, maybe to pull you into these accounts. Again, don't know. Just saying. Okay. Independent oversight or evaluation encourages watchdog groups, civil society organizations, or journalists to follow the rollout of low-income communities to ensure, right, that there's no discriminatory practices, coercion, or institutional pressure that's emerging out of this. Okay. And then another note that I had here is informed consent, or at least parental guardian consent, and genuine opt-in, opt-out for families, okay, or clear equity in the automatic enrollment, especially on vulnerable populations. So this has vulnerable population written all over it. Again, look at what's happened in Africa, right? They roll out the jabs, you know what I mean? If we're looking at financial warfare, digital currency, digital slavery, right, social controls, it's going to come via programmable currencies and so forth. This is a place to set this stuff up, right? This is just ripe for that kind of a thing. All right. And I think that's it. That's most of the notes I had on this. All right. So let me just take a look at some comments in here. Maybe I've stirred some things up. Okay. So we've got BDG. Yeah. Good morning. Rachel. Good morning. Trumpet. Sven. Good morning. TZ. Oz. Crash and Splash. Frank. Geo Rich, okay, TZ Burton, Washington state government signed an executive order giving data centers priority in getting energy. The state is restricting types of energy by banning natural gas, and now the energy companies are warning about blackouts. Yep, okay, good stuff. Thanks, TZ. Not having income tax just gives companies a reason to raise prices. Okay. Good point. Okay. TZ, thanks for the reminding. Oregon taking bold steps versus natural gas. Got to pay attention. Okay, good. Reduced debt. I know Rachel's out in Oregon, so. Okay, let's see. Debt clock probably at 39. No, it was at 39 trillion. Let's just look at it. What the heck? Why don't we just take a peek at this and see where we're at on this debt clock? I mean, while we're at it, what the heck? All right. Debt clock. All right. Again, this is just an algorithm, so it's not that accurate, but it does project. So, we're at 38. I thought we hit 39. Okay, anyway, we're at 38.4. You're right. Okay, Crash and Splash. I'm just adding it up to, so I think we just hit 38 then, right? And we're at 38.4 now. So again, and that feels like it was 4 to 6 weeks ago. So I'm already thinking 39. I guess I'm just already thinking 40 trillion because we're probably only, if this is the case, we're probably only about by May or June, we should be at 40. We should hit 40 trillion, probably by May or June, maybe sooner. Who knows? Okay. But again, it's just an algorithm that's driving these numbers. I don't know how closely accurate it is. I don't know if it ever gets checked to something else. For some reason, I thought we'd hit 39. Anyway, my apologies on that. Okay. All right. Okay. Let's see. Trump makes me laugh. 30.7 trillion debt clock. Okay. What am I hearing? He doesn't care. Okay. Didn't Icon kill TWA? Oh boy, yeah. I don't put it this way. I don't have enough history on that to comment on that with TWA. So okay, again, these guys, most of these guys are not angels. And let's look into that, right? That's a great point. Let's look at TWA and look at that. They already track all your transactions. That's true. Okay, just like Palantir, you can't hide. This is a segue to buying physical gold. Okay, good. When you realize that most people are smooth-brained, then many things will make sense. 1250 with inflation might buy toilet paper supply. Okay, all right, 250. All right, you mentioned defense spending yesterday. They need to bring back the draft. That would clear up all of the insane global wars, etc. Mentioned they need to bring back the draft. Okay, I'm not sure what to say to that one, but I'll think about that one on the draft. All right. I'm just very skeptical of this Michael Dell thing because this fits right into the technocracy movement of moving people onto a platform. That's what you have to do, right? If you're going to take people from where we've been, having some level of privacy still, and you're going to move us from cash, off of cash, where you can transact with cash, and you're going to move us onto this, this digital platform. How do you do it? Well, you start with these kids, under 10. So that way in 8 years, right, they're 18, and now you've tracked information on them, their parents, their family, anybody who's contributed to this until they're 18, and now you've aggregated a whole new data set. And this is a way to get people to, again, free things. It's free, right? Oh, it's free. Everything's for free. And it sounds so great, right? That's the thing. Investing in America, right? I mean, it sounds so good, So does Maha, make America healthy again, right? And there's a lot of questions around that, okay? All these things sound great. It just, this would be the perfect guy to come out of the woodwork, contribute this kind of money, and again, Larry Ellison would raise red flags. Bill Gates would raise red flags. Go down the list. Sam Altman, Elon Musk would even raise red flags, right? Elon Musk's got $1 trillion pay package. He could give out, $6 billion and it wouldn't even make a blip. Now, that's going to require 10 years worth of hitting benchmarks and so forth for him to get that $1 trillion pay package like we were talking about yesterday. But nonetheless, like this is kind of the perfect guy to roll this out, and it's this would be the perfect guy, okay, to roll this out. All right. Seems innocent, looks kind of goofy, right? He's just kind of like got that, like not all shucks. He's kind of got that. I'm just a regular guy doing regular things, and, self-made, the whole story, right? He's got the whole story. Okay. All right. Switching gears just a little bit to something that we know is crooked, okay, is an update on what's going on with the Congress can't invest in stock deal, okay? Again, Anna Paulina Luna is involved in this. Tim Burchett is involved in this. We saw the clips on that yesterday. Here's an update on them talking about this.
Hey everyone, so I just left the floor with Representative Burchett, and after our bipartisan coalition and talking this morning, we have decided, because of a lack of movement from the House of Representatives, to initiate the discharge petition on banning insider trading, meaning it is live now. Now, if leadership wants to put forward a bill that would actually do that and end the corruption, we're all for it, but we're tired of the partisan games. This is the most bipartisan thing in U.S. history, and it's time that the House of Representatives listens to the American people. So it is now live. Anything to say, Burchett?
Let's make America proud. Hey, this place is broken. It is a complete open sewer. Let's at least tell America we're trying to do something right. Anybody making 600% return on their dadgum investment needs to leave Washington, and then you get their butts up to Wall Street.
Go to Wall Street.
Okay, so here's that debt clock just for anyone who wanted to see it. 38.4. You can see it in the upper left-hand corner, and Yeah. Okay. 38.4. So what does that mean? Probably another 3 months will be at 39, and another 2 to 3 months will be, so what is that, 5 or 6 months? So yeah, I would say by May we're probably hitting 40 trillion on that. Okay, let's go through a little bit of this economic data, and then I want to look at we'll get the headlines so at least we have some structure to this. So today we're at the ADP non-farm payroll. We're going to be watching that. And then we get this, we may have seen that. Let me see if that was one that came out this morning. We did see import prices, and ADP was expected at 10,000 estimate, and it came in at minus 32,000. So it was the worst reading since December of 2020. Let me see if I can bring this up, and we can take a peek at this. That way we can. All right, here we go. I think there we go. All right. So worst since December 2020, while November's slowdown was broad-based, it was led by a pullback among small business. Okay, so that's good. We are seeing some small business. So we looked at this one last time. Let's take a little bit of a deep dive on this thing in terms of, let's go to this and we'll get a little bit of a look. Okay, so we've got this. We've got, I don't know what any of this stuff means. Job stayers, median annual change in pay. That looks unchanged. I don't even know what that is. Job changers, median change. Okay, let's forget that. Industry sectors. Goods producing was down from 9,000 prior to minus 19,000. Service providing was 33,000 prior, down 13. Financial activities, 11,000 prior, down 9,000. Professional building and services was minus 15,000 last time, minus 20,000 this time. Again, we looked at these U.S. regions. So we've got the Northeast was minus 12 last time, down 100,000 this time. The Midwest was positive 9,000 last time. It's at 45,000 this time. So that's one of the ones that's up, this Midwest. That's actually positive. And then in the South, we were 6,000 prior, and we went 43,000 negative this time. And then the West, it was 40,000 positive prior, and it went to 67,000. Okay, small business, medium, large. Small business lost quite a bit, minus 10,000 prior, minus 120,000 for this read. Medium-sized business was actually up quite a bit, minus 21,000, up 51 this time. Large business was up 73 last time and up 39 this time. So the takeaway on this is hiring has been choppy of late as employees weather cautious consumers and an uncertain macroeconomic environment, says the ADP chief economist. And while November's slowdown was broad-based, it was led by a pullback among small businesses. Okay, so that's the takeaway on this, is the small business angle. Okay, and that's the positive takeaway. So that's good, right? There's something good in that. No, actually, the small business was led. The pullback was led. Okay, so the small business was really negative, and the medium business was positive, and the large business was slightly negative. Okay, so the real takeaway here on the positive side is the medium-sized business was the one that was positive. The small business took the biggest hit from minus 10 to minus 120,000. That's a big hit. So again, all these things that we're doing, right? The inflation, all these stories that we keep being, and the way we're going to see this show up is at Russell 2000. Okay, that should give us an indication, and it is holding, right? We saw it hit the highs 3 times. It popped through. It came back. It's retesting. If it holds that retest and starts to move higher, then okay, we're getting something in the small business. If we see this thing crack from here, it could be pretty negative, okay? And so again, these numbers bounce around a lot, so we don't want to get carried away and like lock that in our brain. It's like, 1 month they're really negative, the next month they're really positive, the next month they're slightly negative, the next month they're slightly positive, the next month they're really negative, the next month they're really positive. So there's a lot of bouncing back and forth on this stuff, but it's the trend we kind of want to take away. And we know that there's going to be pressure from the AI, or at least we assume so. This agentic AI it's starting to resurface again. It was big at last year at the World Economic Forum. The Salesforce guy, I think Benioff, was out really promoting this agentic AI at the World Economic Forum last year, end of January. So we're only about a month away from, going into this World Economic Forum. Again, that's where they can roll this kind of stuff out. Again, where all these, they're probably going to move away from this World Economic Forum because it's sort of been foiled and it's sort of been called out, the removal of Klaus Schwab, the placement of Larry Fink on there. Larry Fink is definitely not going to get caught out in the streets like he has before, getting questioned by reporters. So they're going to be shifting this World Economic Forum, I think, maybe to something else, or at least modifying how the we get to interact with it. Okay. I think they're going to give us what they want us to see, right? They're done being foiled. Larry Fink and these guys are done getting caught out on the streets, right? And getting embarrassed. So I think that part's going to end. The key, though, is what's the takeaway with this agentic AI? Okay, it was big last year. Mark Benioff said they were going to roll it out. People were already using it at the World Economic Forum. He'd already had test pilots out there. And then the thing just kind of went away. I don't know why it went away, but now it's resurfacing again, right in time for this World Economic Forum, or 6 weeks until this World Economic Forum fires up. President Trump's going to be visiting the World Economic Forum, so that's going to be a big deal as we roll into the new year, right? What's going to happen under Trump 1.0? He made a trip. I think it was the year that he made the trip to the World Economic Forum live, and the markets were very, very volatile during that period of time. I mean, there was. I know this because nobody calls when the market's going up, right? I don't get a lot of calls. When the market starts to go down, it goes down a lot. People get scared. All of a sudden, the phone starts to ring. What can I do? And whether it's friends or, people, whatever. What can I do? What do I do? And it's like, well, I don't want to be a jerk here, but you should have asked me 15 or 20% ago. You know what I mean? Like when we were at highs is the time to start thinking about this stuff. And it's not easy, right? You see us, we're every day we're trying to deal with, are we at a market top in this S&P? Are we at a market top in this Dow? And every single time we get it, looks like it's going to roll over and then wham. And look, I want prosperity for this country. I'm just not sure the stock market is the representation of prosperity for this country, right? When you look at the statistics and you see like 1% of the assets are held, how is that again? 51% holds 50% of the assets. The bottom 50% holds 1% of the assets, and 90% hold the upper 10% hold like 90% of all the assets. So again, for we the people, okay, for everyday people who, put boots on and work hard and, whatever, I'm not sure that the stock market is the representation for them of whether this economy is good and whether this country is seeing prosperity. Okay. It's the prosperity for a few, sadly, like the Michael Dells, like the Carl Icahns, whether whoever's the good guy, whoever's the bad guy in that whole deal. And they don't stop, right? They haven't, Anyway, I'm going to leave it at that. Okay. I'm not sure that the stock market is the measure of prosperity for America. Okay. I just don't think so. I would love to see the stock market sell off and actually get the regular person find a way to say, wow, I can actually buy some of that now. I could actually buy something, same thing with gold, right? Gold's a runaway freight train. People are piling in. We talked about this yesterday with, the speculators coming in and speculation reaching highs. And we can see that through the margin readings, people borrowing money to buy things. And it's funny because we have like 8 trillion that just hit the money markets, right? Money market funds hit 8 trillion. These numbers just don't make sense to me, right? They just, we know that the baby boomer population has like 80 trillion supposedly of net worth, okay, in the US, whether it's debt, homes, savings, whatever it may be. And, when you see 8 trillion or 10%, okay, of that wealth sitting in a money market fund, you have to wonder who's holding that money market fund and what are they intending to do with it? And here's the real thing is can that money be pulled off the sidelines, right? Will it come out of those money market funds? And so let me get into a couple of these things. I wanted to cover this, right? American Eagle, this will kind of bridge us there. American Eagle, right? The store, okay, selling clothes mostly to young adults, kids, was in the doldrums, 6 months to a year ago, right? It was looking pretty grim for them. And then they have a genius ad campaign with Sydney Sweeney and I think Travis Kelce. And sure enough, now American Eagle's back to beating and raising estimates, and it pulled them out of the depths of, basically the depths of hell because it was not going well for them. And so the key here is that the consumer is still out there, and if stroked enough, and if encouraged or led into a product because of Sydney Sweeney or someone like that, people will show up and they will buy it. And take that for what it's worth. Okay. For me, it's a little concerning, But okay, here's what I really wanted to get to was with this Anthropic. Okay, so Anthropic, we know them because of Claude and some other things. They're Anthropic is one of these AI operations. Okay, and just like OpenAI, OpenAI has been talking about. Remember, OpenAI, Sam Altman, Elon Musk got together. We're going to make this OpenAI for open source for people. All right, for the people. And then, Elon Musk and Sam Altman supposedly separate, don't like each other, supposedly. We'll see. Time will tell. Sam Altman is now merging OpenAI to take this private company that's worth $500 billion, let's just say, right? That was the last I'd heard, about $500 billion worth, and take it public. All right. What does that mean? Taking something that's private, taking it to the public market, getting public money, putting it on the stock exchange, getting an initial public offering, and it'll get a lot of fanfare and people pile in, right? The general public says, oh, I want a piece of that, right? Usually by the time it gets to the IPO, a lot of times the value's already been pulled out of it, and it's the other investors are using that as an escape route, right? They bought on the private equity side. They have a stake in it. By the time it goes public, it's a way to take it from them and dump it out on the public. Now, if the market's hot and the market's going up, then usually the IPOs do quite well. And even the early comers to that. But there's a middle stage in there too, right? Not everybody can buy at the IPO. Usually it's reserved for elite clients, right? So Morgan Stanley's going to get a share, and Goldman's going to get a share, and, JP Morgan's going to get a share. And all these guys, again, some of them are going to actually do the initial public offering, right? And they're going to get fees for that. But then they're going to get a certain allocation of this public offering, and they're going to give it to their elite clients. And they're going a lot of times they'll put a hold back on it. Okay, you got to hold this thing for 30 days or 90 days, whatever, so that they stick in it. Some people don't even have that. They can just dump it right away. So day one or day two, the thing's up 20 or 30%, and they're just dumping it. Or they're finding other ways to dump it, right? They can find correlated things and sell other things that are highly correlated to it and basically hedge things off to some extent. Okay, so Anthropic's in a race to go public before OpenAI because they would love to get all that media attention. Okay, here's your opportunity to buy this private AI. You can either get OpenAI if it comes out first, Sam Altman's company, or you can get Anthropic. Okay, so this thing's probably going to go public in 2026. This one's valued at $300 billion. OpenAI's valued at $500 billion. Yesterday, we just saw Sam Altman come out and issue a red alert on AI. So they want capital, okay? And it's this go for broke mentality. And who's going to get stuck with this stuff? Think back to 2001. All this investment goes into, .coms and technology and all this stuff. And a lot of it bellies up. A lot of good technology came out of that we're living off of and using today. But who took the hit? Okay, who took the hit in the 2001 NASDAQ bubble, right? Who takes the hit? When you see these things going public, it's just another sign of them trying to, raise capital, but also potentially put the risk onto the public markets. Okay. All right, so I wanted to cover that. Oh, you know what? I think we hit this stuff. What was important today on this, and then I'll get to these headlines. So at least we're going through those. I think we're good on all this stuff. There's nothing on here that I really wanted to talk about today. Okay. All right. That was Monday's. Let's just go through this. Okay. Here we go. The headlines. All right. Trump on the largest tax refund. Dell and Trump invest in America. Anthropic to file for the IPO. OpenAI, right? The competition with OpenAI on this front. That's what we were just talking about. Okay. I think we're good on that, right? They've employed a high-level law firm, Wilson Sonsini to lay the groundwork for that IPO, and it's a race. It's a race between OpenAI and Anthropic to see who can get out there first and get the fanfare and get the investment. Okay, all right. We talked about copper hitting record highs. I wanted to mention that. And we'll take a look at that chart, right? That 20% sell-off in 1 minute, okay? And then now we're back on highs in the copper, okay? We get that nice pullback, and I said, at the time, look, now it makes a lot more sense, right? Something comes off boil. You can come into this copper, and it's a lot less risk here. At least you can manage the risk now. Before, when it was at all-time highs, it was hard to manage the risk, okay? So we'll take a look at that chart. I want to make sure we get to that one. And then here we go. So this is kind of the top story of the day, Witkoff and Kushner in Russia. And the word out is that they had constructive talks, right? A lot of work still needs to be done. Rubio's saying the Ukraine economy could be much larger than Russia's economy in 5 to 10 years on a rebuild. So this is kind of the thing that we want. Remember when Witkoff said, with Jared Kushner sitting at his side, that there was 2 years ago, right? This is a master plan, okay, with what's going on in Gaza and the Palestinians and Israel. And he just said it. I mean, it's out there. And at some point, I'm sure it'll be a good cause to run that clip again. But Witkoff said, this has been a 2-year plan. And when Jared Kushner was like, oh my gosh, like, what are you doing? Like, you can't, that's the quiet part. You can't say out loud, okay? Here we are again. Rubio's now saying that Ukraine could be, and we've seen the bankers line up here, right? It was after last year's World Economic Forum. They had a meeting and all the bankers lined up, right? They're ready to move in and rebuild Kyiv and rebuild Ukraine. And I mean, there's just, we continue to go down this path of, has Russia gotten what it's wanted with that corridor down into the, to the waterways so that they can control their outflow, which is their biggest product, which is energy, okay? Have they achieved what they wanted? Are the people that are in these regions, that probably wanted to be Russian anyway, they've got a lot of Russian heritage and culture. Are they happy? Will they go along with this? Are they going to fight back? Can they get fair elections in Ukraine, right? That's a whole other question. And then the other thing here is we hear all this, when Rubio says that Ukraine could have a much larger economy than Russia in 5 to 10 years. How can that be the case if all the fighting age men, okay, that we hear are dying at these crazy rates, 5,000 a week, 7,000 a week, whatever it may be, these large numbers that President Trump keeps mentioning, if you're killing off all your, fighting age men, okay, what's that economy going to be built on? If you've lost your productive workforce, which is, again, women are productive too, but so are men. And if you're killing off a lot of these men, young men, and you've wiped them out, you've decimated your workforce. Okay, so you just have to think about that, right? It doesn't add up. The things don't square, okay? This is Witkoff's sixth meeting with Russia, okay? I have to question, why was Jared Kushner there? What is this duo, right? We saw them, like I said, we saw them in Israel talking about this with the Palestinians in Gaza. And now here we are, we see him in Russia again. Why does President Trump want Kushner there? Does he trust Kushner? Does Kushner have good input? Remember, he's the one that negotiated things in, the peace in the Middle East with, Jerusalem. What was the whole thing? The Abraham Accords. Look, Kushner's not, he's clearly a smart guy. All right. But what is this duo, Witkoff and Kushner? Again, it's a little bit sketchy to me. And I just have to wonder, what are these clowns up to now? Okay. So Russia is too focused on we keep talking about this, right? It's complicated, but Europe wants this war because they have so much debt and their economies are struggling and they would love to have access to Russia. Okay, I think this has been in the plans for a long time. There's a lot of people who've done a lot of work on this saying that this is what Europe's wanted for a long, long time, is to basically destroy Russia, get in there, get access to it, all its resources, all of its energy, and then they don't have to pay Russia for the energy. They just, again, this is going to be a mess. Even if they pulled that off, think of all the inner fighting that's going to come from who gets what, okay? All right, but Russia is too focused on Ukraine now, but we do see signs of them building up efforts. Could it be North Korea, right? We see North Korean fighters coming in this Ukrainian war. How would they build up efforts to fight World War III against Europe? Drones. This week, after yesterday's meeting, Putin is actually headed down to India, okay, to again talk about energy, I'm sure, but also talk about drone manufacturing. We saw Jeffrey Gunlock, okay, of Double Line Capital in a clip not that long ago talking about India is the future. It's the most populous nation. I'm not convinced of this just because a lot of brilliant people in India. I don't know if I don't understand the work ethic and I don't understand the culture. We all know the call centers, and we know that, and I've had to work with Indian coders, through time. And I'm just not that impressed with the work that comes out. Okay. I haven't seen it. I'm not that impressed. I've had friends that have gone to India and done work there. They've been consultants. They've been engineers working on all different types of food grade and pharmaceutical plants there. And they just, again, they come back with the same kind of a thing. They're not that impressed. Now that can change. Okay. And maybe it is changing, but I'm not convinced anyway. The point is, how would Russia fight a war against Europe? Well, it would have to be drones and unmanned type situations. Okay. So can that come out of India? Can India be that producer for them? These are the kind of things we're watching for. At least I'm watching for as we see what comes out of this. Okay. Then we get, okay. Yeah. We know we started off with this US driven 28-point plan. We know that it's now down to, last we heard, it's a 19-point plan. And we really don't know what's in this 19-point plan. The U.S. is keeping things pretty tight-lipped after yesterday's meeting. The only real feedback we're getting is out of Russia, out of the Russian diplomats that were involved in these conversations. And, there's all kinds of video footage coming out on this that's everything you touch anymore is like a loaded gun. It's like a loaded box. You could touch upon something and open that up thing into a whole 2-hour story, So, I'm just going to leave that one alone because it doesn't really matter. But who is at the table? What are their intentions? What is the U.S. trying to get out of this? What's Russia trying to get out of this? What is what's the most likely outcome? And the most likely outcome still tends to be war. Okay, World War III coming out of this, probably being fought with drones and so forth. We saw that clip yesterday with Palmer Luckey, Anduril, and all the sophistication that's coming out of that space. And I'm sure that there's a lot of sophistication that's coming out of these drones. And is that how this next war is going to be fought? Is that what they're preparing for? Okay. All right. And then next story, quick one. This is Bank of Japan is looking more and more likely to raise rates. We're seeing this. We'll take a look at our 10-year note. This is so confusing. And I guess the big thing today is trying to keep things simple. Looking at this gold, what's it doing? It's actually ripping now. It's looking really good, on the upside. The breakdown doesn't appear to have happened. We'll have to look for another structure where we hit the apex and it held above. You can't deny it. I would have loved to have seen I just think, a healthier market to see this gold sell off to 3,600. It would have been, to me, that would have been a point of value that would have been well-deserved. Anyway, the gold's one to watch. It looks good. The dollar's one to watch. It looks terrible. It doesn't mean that it's totally done yet, but it's looking pretty rough right now. On this harmonic structure, longer term, you still have the 95 level, the big, converging triangle that we've talked about so many times. So it's not done, but this particular trade is looking rough. It's been very, very tough. It's been a very tough trade, the Swiss franc especially, some of these currencies. And then we look at the 10-year note, what's going on with that? Those are the ways to keep things simple, gold, dollar, and stocks. And we have to add 4: gold, stocks, dollar, and debt market. Okay, so we'll take a look at those charts here in a minute. In Japan, it's looking more and more likely that they're going to raise rates. The key things that they've been waiting for, one, to get a prime minister that they could get behind. They have that with Sane Takaichi. The other thing they've been watching for is to see if the U.S. markets can actually hold up, right? And if they can hold up after the global tariffs, right? This whole wave of global tariffs that we've seen come through, it's gotten quiet, right? It's at the Supreme Court. What's going to happen with the next round of, are they going to use tariffs again? And if so, how are they going to use them, right? And this takes us to that copper, okay? The part of the reason copper is running is, one, the demand, probably, hopefully. 2, trying to front run any tariffs that go into that space. That's going to put more of an upward pressure on copper, okay? And then what they want to see is a self-sustaining wage growth trend, which I'm not seeing, okay? But I think these are the things that Japan was kind of on hold for, to see if they could actually get away with raising rates. So essentially, they've been waiting for the green light. What are they up to in Japan? I keep asking this question. Berkshire Hathaway months ago said, we're making forever investments in Japan. I don't understand that, okay? I have ideas on why, but I'm not sure of this. Then we see the Saudi Sovereign Wealth Fund doubling their investment in Japan. What are they seeing that we're not seeing? Massive amounts of debt, very small island nation, fighting for leadership of this Asian rim, going to have to import like they always have. What is Japan going to produce in the future that's going to make them a forever investment for Berkshire Hathaway or for the Saudi sovereign wealth fund? I'm not getting it. I'm just not getting it. Japan has lived off of electronics from the 80s and 90s, okay, and cars, okay? Cars have been a big thing for them. The tariffs are leveling that playing field, and electric vehicles are leveling that playing field to some extent. So just keeping an eye on this Japan. Very interesting that they're going to be raising rates while we are talking of cutting rates, okay? And this is that, it's kind of like when things aren't flowing down the river the same way, like I always think of like the Gulf, water's coming down the river, it hits the Gulf, and then you have the tide coming in, and the two hit each other, right? And they don't get along very well, right? When the river's flowing seriously down into the Gulf, coming out New Orleans, and you get the tide going up, you get water pushing back up into the river, you're getting two-way flows there, right? And you're going to get a lot of turbulence. So that's what we're looking for here with this, Japan raising rates, the U.S. cutting rates, and what's going to happen with Europe. Bank of England, European Central Bank, what are these guys going to do? Are they going to sit in the middle and do nothing while the U.S. cuts rates? That's why this dollar is probably under pressure at this particular time, right? Again, assuming that that's all stuff that's above board. All right. And then I wanted to get into this, right? We've been talking about this thing with this American Bitcoin. Eric Trump's, we saw the clip of him, showing us inside of his data center where they're mining all this Bitcoin. And what are they? I think he said they're mining like 4% or 8% of all the world's Bitcoin per. Again, the whole thing just doesn't feel very good to me. But nonetheless, here it is. Here's a clip on. Let's just run these three. I've got 3 clips to run on this. One is just the overview of American Bitcoin getting hit nearly 50% in less than an hour yesterday. And then we're going to look at strategy, right? This is that Michael Saylor, their company getting hit. One of their representatives was out talking about it. And we'll hit that one after this, but let's hit this one first. This is a little bit of background on what happened with American Bitcoin yesterday.
You can see shares of Strategy popping a bit, up nearly 7%. I can't say the same for American Bitcoin Corp. The ticker there is ABTC. That, of course, was founded by Eric Trump. You had a story out today about the share move, and it is staggering. Shares down about 39% at the moment. What's going on there?
Yes, so American Bitcoin, they're a Bitcoin miner that's spun out of Hut 8 Corp. And this was co-founded, like you mentioned, by Eric Trump. Donald Trump Jr. is also a shareholder. And their main focus is just mining Bitcoin. But the problem is, like I mentioned, that Bitcoin prices have really declined this year. So for a company where you're getting most of your revenue from either holding Bitcoin or from selling Bitcoin, when the prices go down, that's going to have a big impact. And we've seen that American Bitcoin has underperformed Bitcoin over the past few months, and that's what's really weighing on shares. And they're also a stock that has a large retail investment base as well, which can cause some more of that volatility too.
Okay, and this next one is a guy from Strategy, again, one of Michael Saylor's, these concocted structures that they've created, right, centered around Bitcoin. Here he is talking about an update of them not having to liquidate for quite some time. I'm not sure that this is the case. Maybe it is. But here he is talking about there's no need to panic. They're not going to have to liquidate. I'm not sure that's the case. We'll have to wait and see. But here he is. And my point in all this is that I think what we're seeing is that this Bitcoin saga is nearing an end for now, okay? And we'll look at that chart where it came back into the moving average. Again, just a plain vanilla pullback at this point in time. I still think they want to hit these guys. They want to, if Bitcoin's for real, they're going to come and get these guys. They're going to get their Bitcoin. They're going to hit the Bitcoin pinata, and they're going to scatter it all over the place, and they're going to be the ones there with the first broom to sweep up the maximum amount of Bitcoin. If Bitcoin is for real and it's actually worth holding, I'm not even convinced of that. It doesn't make a lot of sense to me, but here he is talking about that. No pressure at this point in time for Strategy to liquidate their Bitcoin.
I get the concern around our ability to issue equity. Look, in 8.5 days, we issued $1.44 billion of equity. In 8.5 days, we issued enough equity to cover 21 months. And then on the back end of that, we have 74 years of dividends in our Bitcoin. So we've addressed sort of this sort of concern around us selling Bitcoin. Now, if we are able to grow our cash dividends, that cash reserve, to call it 2 or 3 years of dividends, we're really talking about the end of 2028, right. January 2029, where we might have to consider, do we have to sell Bitcoin? We would if we had to pay our dividends, but I don't think realistically, I don't think we're going to be in that situation now that we've built up the cash reserve.
Okay, so he doesn't think they're going to have to liquidate it. Now, here's a little bit of background, a little bit longer term, okay, since we think this Bitcoin saga may have come to an end for now, right? This is the kind of stuff you see when that American Bitcoin takes a quick hit like that in 30 minutes, 44% hit or whatever it was in 30 minutes. Those are the kind of capitulative type moves that tend to end things temporarily, right? It buys time for everybody who's on potentially the wrong side or trying to regroup when something's been under attack like this, okay? And I think it's pretty clear that Bitcoin's been under attack. No surprise, because the target's out there, right? This strategy, the target's there, right? Not so surprised to me, but here is this Gupta, okay? This lady talking about, I forget her first name, but her last name's Gupta, and she's talking about the long-term blockchain, longer term. And so let's kind of put a realistic cap on here with this one.
So we were having an interesting conversation in the commercial break about DATs. Obviously, we just spoke to the CEO of Strategy. How are you viewing DATs at this moment in time, especially as the broader market comes under some pressure?
We are invested in over 8 to 10 of them and super frustrated with the investments with DATs because it's the most opaque investments as I see we have done. It's like you buy a public market stocks and then they are responsible for at least having public information, filings, etc. But what I'm seeing with that are the main sponsors, 2 or 3 groups, mostly the funds, the crypto funds, are the majority stakeholders. And there is no transparency. We just get to know through lawyers, not even the sponsors group, oh, we have changed this rule now. Now we're not going to release the stocks. We are not going to make it public. We're going to extend and actually increase the price, etc., etc.
But ostensibly, that lack of transparency was known before you made the investment.
No. Never the case, because when you make an investment, you are basically talking to the sponsors group and you are expecting that there is going to be monthly or quarterly meetings with the main executives, at least the executives. What happened over time, like any other big crypto BAF, is that people started saying, hey, we are the sponsored group. We don't even know who's going to be the CEO. We don't even know what it is, but we are doing a $2 billion Solana DAT, or we are doing a $1 billion Ethereum DAT. Just take our name, and those people have 5 jobs, and now it's impossible to reach them, and the new CEO has no idea what is happening at the sponsors level.
Okay, so there's a frustrated investor in these, in all these assets, right? In this, blockchain, digital asset space, saying that, they believe that there would be transparency. The transparency isn't there. I'm not sure that we should be all that surprised by that. Okay, but I think that gives us, the pressure seems to be off on this Bitcoin. Let's take a look at a couple of these charts. Let's go in here and let me pull this up. We've got... let's go here. Okay, we've got this Bitcoin pulling back into this area. I still think it's going to ultimately come in and fill this gap where that green circle's at back in here. Let me just extend this across where this purple shaded. Let me just do that. Okay, so this purple shaded zone going across the screen, you can see it touch the top of it, okay, right here. And I know I should label this. I apologize, Trumpet. But you can see it came back. We had a moving average here, right? This red line, okay? And we have the top of this range, okay? The top of where this gap was at, back in here. And a prior pullbacks in this area. And it came back into that. So again, you get the moving average, right? You get the prior technical levels, the gap, the prior low, right? And the prior highs back in here. Essentially, we didn't quite come into the prior highs back in this area, because that would have been around 75,000. We know that the target on this for that strategy is like 77,000. That's their supposed average price. I think it's probably higher than that, they're going to have to find ways. Again, that guy's not going to come out and tell you we're screwed, right? We can't meet we can't meet the dividends. We can't meet this. We can't meet that. This guy might be sweating, but he's got to put on a good show. Again, transparency. That's what that Kavita Gupta was talking about. They're not getting the transparency. This strategy guy is not going to be transparent because why? That just opens up the doors for Wall Street to figure out how to go after him and attack him. Okay. So he's not going to be transparent, right? They can't, they sort of can't be transparent, right? Or they're going to get attacked. Okay. I think, right? That's my take on this. I still don't think this thing's ultimately done, but the pressure's off on this for a period of time. So lots of talk in the media. It's been very active. It's what's going to happen now. We're probably going to go into a quiet period, right? This stuff's going to trade sideways for a while. We're not going to hear anything about it for 4 weeks, 6 weeks, 8 weeks, 10 weeks, February, March kind of time frame. More than likely could get at, I mean, anything can happen, but that would be my guess is that this saga is done for now. And we're going to come back and revisit this sometime in 2026. And who knows what the catalyst will be. So, where could this Bitcoin bounce? Okay, it's like, great. That's great. Where could it bounce? Very likely it's going to come back up to that dark purple line. Okay, what is this? Basically 100,000. That's a big psychological level, okay? And then it could get caught potentially in this sort of, flat top triangle, right? Where it just kind of fills this void over time. That's possible. Okay, again, this thing's all over the place. I just don't see anything that I wouldn't have wanted to buy it here, even though you got 2 or 3 things there, because I think this gap could have been filled. If it comes down into this area, right, and it really presses on these prior highs, and there's more fear, okay, and you actually see, something happening with this strategy, like strategies blowing up, American Bitcoin, right? Trump's decided, hey, mining Bitcoin isn't for us. We're going to get out of this business. When you see that kind of stuff happen, if that were to happen, to me, that is the fluff is out of it. Okay. And there's actually, who's going to back this Bitcoin? That's always the question, because this thing's been violated. The original intent of Bitcoin has been totally violated in so many different ways. Aaron Day does a great job of covering this. He just did something, I think it was Monday or Tuesday of last week. It was Thanksgiving week, sometime over the last 2 weeks. So you can find it, aarondayshow.com, I think it is. And he has all of his shows listed on there. You could go through and he walks through this thing for an hour and a half. He walks through all the problems, potential issues with Bitcoin in this digital space, and then what the solutions are with the privacy side of things. So to me, this whole space out here just feels like it's garbage, right? It's just a garbage asset that has been, I think it was a government run entity myself, to test the waters for this stuff. So I don't know if I really ever would want to be a buyer of any more Bitcoin, right? I actually want to be a seller of any Bitcoin on any rallies if I haven't gotten out of all the Bitcoin, that I may have held. That's just my take. I'm not a fan of this thing. I think there's much better alternatives that make a lot more sense, that actually achieve privacy, actually achieve transactability. You can actually build a real asset on the backbone of these things like Zano, okay, and the Freedom Dollar. You can use these type of things that actually have substance to them. And most importantly, they give you privacy, which is becoming a fleeting thing anymore that is hard to find, right? It's very hard to find privacy almost anywhere anymore. So to me, those are the things, like, that's a sought after commodity, right? Privacy. Okay. And freedom of rights and so forth. All right. So that's something we're seeking hard. So again, Bitcoin. All right. Let's take a look at this. Copper. Here we go. Here's copper. All right. Up in this green box, we were saying this thing was getting pretty overvalued. This high up in here was, I'll just label this while we're here. Let me just throw this in here. Copper weekly continuous. Okay, there we go. I'll just leave that there for now. Okay, and I'll clean that up. But the key here is we have this green box. We were saying it's up at the end of this trend channel. It's getting pretty overvalued. It was getting really overvalued. And then that one spike down was 1 minute. Okay, all that is President Trump releasing a headline, okay, that says we're not going to do this or that or whatever, right? We're going to change this on our tariff approach, or we're going to do this, right? That was when it sold off back down to this moving average, down into where this long yellow circle's at, down in that area, it's like, look, at least we know where to manage the risk now, right? We can use this moving average, right? This black line. And we can see that it's back in, more than anything is this, right? It's back in an area where you can sort of understand it. Okay. And again, this copper isn't like, it's not like this thing's a complete runaway freight train, but you can see there's a point of value all the way through here, right? Where that light yellow's at. And you're like, okay, it came back into this point of value. What does that mean? It means people can pull copper out of the ground. It means they can transport it. They can refine it. They can use it for production, and everything sort of makes sense. When it starts going like that fast, typically these are the kind of things that happen. 1 minute, that sell off from up in here, okay, up there, down to here, okay, happened in like 1 or 2 minutes. So if you were speculating on this, you got smoked, right? And there was nothing you could do about it, because in 1 minute, I don't care how, even if you're an algorithm, right, that's watching this, I'm not sure the algorithms even figured out how to get out of that quickly, okay? Anyway, now you can see it grinding back. It's a much more stable grind back in this copper. Okay, this whole move right through here looks pretty good. So this to me seems more like there's a little more meat on the bone to this, right? The copper rally is for real. Now, copper is a pretty smart market, right? A lot of times it gets the name Dr. Copper, okay? And it picks things up. The problem is I think this is being distorted by all these global tariffs and shifts and things that are taking place, and the government having involvement in all these rare earth minerals and metals. And why did we allow China to have all this? And who really controls the copper? How much is coming out of South America? Where's the copper coming from? Who controls it? There's a lot of geopolitical things around the copper. And are we really going to bring industrialization back to the U.S.? And if we are, what's it going to look like? And does it involve copper? Okay. Those are the kind of questions we want to ask. Copper used to be a pretty good inflation measure, but I just think that's just, I don't even know if I want to look at copper from a perspective of inflation. It's just very concerning to me. Okay. Here's a longer term chart, I think, on copper. You can see there's an upward sloping trend channel to this. This is a monthly. I won't label this one, but anyway, I should have all these labeled because these are pretty static. They don't change that much. But you can see there's an upward sloping bias. We're at the upper end of this. You can make the argument, two things can happen here. Could copper sell off back into this area? It's possible, right? I think that 1 minute sell off in copper, when this thing was pressing out into that green box again, up to new highs, that was enough to sort of, if you're going to break out to new highs and copper is going to see something different than what it's seen over the past, because this goes back to 1972, right? So that purple box is 1972. So you're talking about, 50 to 60 years, is that right? 35, yeah. So let's say 50 to 60 years of history here. And you can see the movement of copper. If we're going to see something new, it's going to break out of this trend channel. That 1 minute sell off to me is an indication that it's preparing to break out to something new. Okay, it's possible that copper could break outside this trend channel, and we could see something different happen here with copper. All right. Okay, let's take a look at this gold. Here's the gold market. We've been watching this. Here we go. Okay, so we've got, this was this converging triangle we were looking at. And again, I've been desperately trying to hang on to this, right? So I've been drawing this bottom to see, like, could it extend out? And it's just not working, right? I mean, we should be at that pink box or below that pink box at this point. Now, could it potentially still go down? Maybe. But right now, it's looking pretty solid, right? This gold's looking pretty solid. It's hanging in there. What does it do? Does it go sideways? Does it go up? I think it's a trading market. I wouldn't want to put it this way. I wouldn't want to take half my retirement, okay, and get caught. If we start breaking the new highs, I wouldn't want to take half my retirement or more and lump it from something all into gold or silver at this point in time, right? And do one of these big transfers that these guys all promote. If we'd gotten 3,600, I'd be like, okay, that's a better place to come in and do a massive transfer like that. What I'm saying is I think this is a trader's market, okay? I wouldn't want to get too heavy on either side of this thing. I'm just not convinced of the upside. And I would love to see 35 or 3,600, right? For a lot of different reasons that don't really matter unless we break down. Because why talk about something that just probably there's a there's a good chance it may not come to pass. But that doesn't mean that we're going to 44 or 5,700 or 7,500 or 100,000, whatever number that people are going to throw out there. We could trade sideways for a while, okay? And again, if this dollar has any chance of this harmonic structure working out on the upside, this gold should and could potentially come under pressure. Now, what's another outlet on this? The crude oil market. Let's take a look at that. I want to pull up the crude oil. This thing just keeps plodding along. Here's the bigger picture on this, right? We have this converging triangle that goes all the way back to, you know what? I'd say this is like what, 2019 back in here. And this high up in here is 2022. So this is 2019. So it's 2019, 2022. So that's about a 3-year window. 3 years that this clearly for 3 years, this triangle has been building, right? You can see the touch points. We saw this blowout down in here. This is, again, when President Trump took it to negative $40 a barrel. There was so much crude oil out on the ocean seas, they didn't have a place to put it, right? So again, if you could store it, they'd give you gold, they'd give you crude oil, and you could go to the financial markets and hedge it off and basically make $40 a barrel. If you got it at the right time by just taking it, they would give you $40 to take the crude oil. You know, if you could do it in the right contract month, and you'd have to have a lot of money and a lot of storage capacity, but nonetheless, you could have gotten paid $40 a barrel to take as much crude oil as the world had to offer, which was a lot at that point in time. That was the one thing that blows this converging triangle apart. But especially since this high up in here, this thing's definitely been converging, right? We've hit the apex. We're holding below it. The trend seems to be down. Okay, let's take a look at the shorter term on this. We also have this harmonic structure at 63.18. We've been watching it. It just, you know, it's just hanging out below here, right? We spent a lot of time back in this period of time. What was this, like, you know, last year, or no, was it this year? September? Yeah, September of 2025. So August, September, we were still messing around with the 63.18. Now we're below it. That would be where I'd still manage the risk for now, 63.18, which is getting to be distant. You know, we probably want to think about bringing this thing down, but you know, because it's trading at, like, what's the low here? The low on crude oil is what, 57 an ounce, 56. I think it may have actually touched 56. 57, 56 is the lows. And right now we're sitting at like 59. Okay. So it's a $4 risk at 63.18. I just don't feel comfortable bringing in the risk level yet because, you know, for those of you who remember, we had that, you know, again, back to Witkoff, back to Kushner, back to, you know, the stand down of Israel against Hamas, right? And everything that further ensued in the Gaza region, the Palestinians and everything else. We had that target of 79.37, and it went up and retested that multiple times, right? Before it got down below the 63.18. So if this harmonic structure is going to work, I don't want to get carried away bringing this risk down. That's why the bear put spread works so nicely. Your goal with that strategy is to just keep doing it over and over and over again and hopefully get it right 7, 8, 9, potentially even 10 out of 10 times over the course of a couple of years. And it's a very good strategy. Your risk is limited. Your gains are limited on the downside. That's why you want to keep every bounce, you put it on. And you could do 2 of these, right? You could put one on and stagger them. 1 month, another month, another month, another month. One of them works, take one of them off, leave one of them on, right? Put the market rallies, put another bear put spread on, and you can do them at different levels. So you get a lot of flexibility. Now, I know a lot of people may not feel comfortable with option strategies. There's plenty of videos out there on how to do a bear put spread. And I get it. It's work, right? And do people want to do that amount of work? You know, that's for everyone to decide. But the information's out there. The concept is good. And I think really the key is to take your, you know, anytime you're investing in these things, to take your personality and try to build that into what kind of a strategy you're going to use. It's just, you can use this bear put spread, a plain vanilla bear put spread, and put it on pretty easily without, you know, the only way you're going to learn to do it is to do it. You know, you could do it in a practice account, which is fairly good. You can also do it in a real account on a small level. This thing can continue to work. Okay. But to limited downside, limited upside, and you're just trying to do it a lot of times with a high percentage, okay? To try to do anything else in here is tough. There's not a lot of volatility. It's hard to trade this market. This is, oh boy, how do I get into this? Right now, like gold, I don't want to carry big positions in gold because it's very volatile. You can carry small positions and you have big moves. With crude, you can actually carry bigger positions right now because the moves aren't that big, right? So you should be scaling up your size in crude oil and actually scaling down your size in things, or having small size in gold, right? Because the volatility will compensate. There's enough movement in gold. I mean, gold had what, $65 ranges, 2 of them yesterday, right? Sold off, went up, sold off, went back up again. I mean, you had 4 65-point moves in gold yesterday, right? I mean, you can't make it up. I can remember times when 65 would have been a massive one-day move. One in one day would have been a massive move in gold all alone. Now we're getting 4 of them in a day. You don't need big size in gold, right? You can use big size though in crude oil because the volatility is down in crude oil and it's almost doing nothing. So, adjusting for volatility, I think that hopefully is a good point in adjusting for vol. All right, one last one here. We've got this natural gas. We just keep looking at it. Last week, we hit these levels up in here. Harmonic structure, the contracts rolled. We got to move on, right, from some of those old structures. They worked. We hit them up in here. We said, look, natural gas probably going to pull back. It pulled back. Last week, we took a quick look at natural gas, and we said, look, probably a decent place to be a buyer in here. And sure enough, natural gas rallies, push. Same kind of a thing up in here. I would say natural gas getting a little overextended again. So again, if someone happened to buy, you could sell a little bit up in here, look for a pullback. This is that concept. These are boring markets right now, right? Everybody's caught up in gold, Bitcoin, stocks, this other stuff. I'm going to take the lesson myself, right? This natural gas isn't a bad place to be. I'm probably going to start trading more in this and more in crude oil, especially if this dollar trade doesn't work, right? I still hold out hope in this thing, because it just feels to me like they're trying to shake people loose. There's a big move coming in this Swiss franc, in my opinion. And if that's going to be the case, then they don't want people to ride, right? These are not good people, right? This isn't like the amusement park where they want everybody to get a ride on the roller coaster, right? They want to leave this for the few, okay? So typically they will try to shake people loose. I don't know why it works that way. I don't know if it's just evil. I don't know if it's, I don't know what it is, but they always seem to, 80% of the time, they want to shake people loose from a trade, okay? And the other 20%, they don't even let you in, right? So you have to be very careful on these big trades when you position. And then once you actually do this battle, that's what we're in now with this dollar, is a battleground. It's like we're trying to fight for position. And if this thing starts to work, you have to remember that and say, look, and I'm talking to myself right now, right? I mean, this is me as a trader who's done this for, 30 plus years, traded, tons and tons of, trades and markets and all over the place. I'm telling myself this lesson right now. If this thing starts to work, don't take it off. This is one of those ones you sit on your hands, right? You feel like you need to push the button and take profits, go for a bike ride. Go get out of it, go leave and just let it be for 3 hours, right? Like if you're going to commit to this trade and if it starts to work, you're talking about a massive move in this Swiss franc that could rock the world, right? I mean, literally world rocking type stuff. And that's why I've been doing research on South America, Venezuela, Argentina, how it connects back to Switzerland, post-World War II, the money flows, the wealthy people, the small business, the diaspora, right? If you want, you can look into this stuff. At some point, I'm going to cover this. Again, why cover stuff? I mean, there's some value in covering it, but I'm trying to get this dollar position myself. I'm fighting like crazy, for the last 2 or 3 weeks, just fighting like crazy to try to get something established here. And you get 1 or 2 good days, and then they just take it all back. And it's just very, very difficult right now. And it just has that feeling to me that they're trying to shake people loose for what could be a massive move in currencies. And what could lead to that, stablecoin, I mean, it's just countless things, right? We just need to create a big laundry list of this stuff. All right, with that, Probably didn't cover enough energy for today because there's a lot going on with this mission, Genesis, right? This whole thing with Chris Wright. I need to go back, look and see when they were sitting around that table. What did Chris Wright have to say? And also look at what what our U.S. Department of Agriculture is doing. What what they're doing with with they're trying to get prices down, but they're not doing. We'll cover that on Friday with the commodities. This is going to keep coming up. And I think for the roundtable, they're going to take this. I think we got it. I think we're going to cover technocracy and food, right? That's going to be our next one. I think it's December 21st is going to be the next technocracy roundtable. I'm sort of excited about this one because I think if things go well for Aaron, we can actually roll out a potential solution in January. He's doing one right now called Osara, I think it is, and he's going to roll that out Thursday. And I want to see what comes of that because it's a healthcare, what does he call it? Healthcare tourism. And so I'm very interested to see what, I think I get what he's talking about, but I don't want to speak about it because I could be wrong. But he's going to roll out this Osara. And with that, he's going to have a lot of the background to potentially roll out something like this where we can connect the producer of agricultural goods. I just saw a video. It's happening, right? A peanut farmer said, you know what? Just a quick thing on this. Peanuts in the 1980s, they were making $700 a ton, I think it was. I forget what it was. I mean, whatever it was, they're making half that today. Okay, so inflation's high, right? And this is a peanut farmer, and he's like, screw it. I just started selling it direct. I just put it out on the market, created a website, and he sold out all of his peanuts. And not only that, they did peanut brittle or something. I don't know how they're doing it. But, hats off to this guy because that's a capitalistic mindset. Forget the middlemen. Screw them. I'm just going to go direct to consumer. And they're going to be happy because they're getting a good product at a better price. And I'm going to actually finally make some profits again and screw the middleman, right? And that's where we've gotten to in this country. And, that's what's going on in the agricultural space. It's what's going on in grains, ag, live cattle, the livestock, all that kind of stuff. So I didn't think the show was going to be an hour and a half today. I really thought it was going to be like 45 or 50 minutes, but somehow we found a way to extend this out. I'm going to save this there's an outlook from a guy at Morgan Stanley. We'll save this for tomorrow. Tomorrow's equity day. This will fit well with that. All right. With that, everyone, have a blessed day. I hope the show was useful to you. I'm struggling with this dollar. We'll look at that tomorrow too. We got it's not too far from the breakout zone, but it's just very, very frustrating trade at this point. And so again, chop wood, get in there, dig, for me, that's what it means to me is I just have to trade, try to find good spots and see if I can't get something established in here again. And, I still have a big position or too much of a position on probably. Well, anytime it goes against you, it's too big. Anytime it goes with you, it's not big enough. Right. Anyway, my position guy got stopped out of a few things this morning. We'll see if it's worth trying to put those back on. But, with that, have a blessed day. We'll come back tomorrow, look at equities, and then, come back on Friday and do the commodity stuff. So thank you for joining. I hope it was valuable and hope you have a great and a blessed day. Thank you.
City was gone. There was no train station. There was no downtown. Somehow it disappeared.